Right, hello and welcome to Camel Finance. I'm your boy Camel, and on this channel, over the last, well, for a long time, we've been talking about inflation, right? And more specifically, we've been talking about the expectation that inflation would be declining. The decline in inflation would set up a pause in the Federal Reserve rate hikes, and that pause in rate hikes would catalyse a rally to all-time highs in the stock market, risk assets as well, including the likes of Bitcoin. This week, we have, of course, seen CPI come in cold. So far, so good, right? Happy days. And take a good look at this, okay? Because only 7 of the 31 core components are seeing inflation. So this year-end rally seems very much intact. And take a good look at this. Pause your screen, take a good look at this if you're interested. So happy days there. And we are seeing even more confirmation of this as of yesterday's PPI inflation data falling to 1.3%, which was below the expectation of 1.9%. Core came down significantly as well. And most importantly, this is the first drop in PPI inflation in 4 months. So both PPI and CPI inflation are back on the decline. And this narrative around a Fed on track for a soft landing is starting to resurface. Remember, we've been saying over and over again, we want to see this narrative unfold. We want to see this narrative proliferate, because as this becomes the mainstream accepted narrative, that sets up everyone to be blindsided by a surprise recession. Remember, the biggest problem that we've had for the bears is that everyone has been calling for a recession. Everyone has allegedly been able to see this recession, this crash coming. And the first rule of recessions is that they always show up when no one's expecting them, right? When everyone is going to get rich and positioned for a crash, then we're definitely going to execute the pain trade, which of course is to the upside. So as of right now, happy days across the board. Inflation and PPI as well also coming down. So again, happy days, right? I also like to point out this chart here every once in a while, because look at the M2 rate of change, right? The M2 rate of change leads the US inflation rate change year over year by somewhere in the neighborhood of 18 to 19 months. So you can see here, the decline in M2 rate of change manifests as a decline in inflation year over year, somewhere around 19 months later. And it's the same deal here, 21 months later. The same deal here manifests 18 months later. Here manifests 19 months later. And so this little wobble that we had here in the rate of change of M2 is what is likely causing and what is likely behind this little wobble, or this small patch of alleged stickiness in inflation that we're currently experiencing. So we are here in terms of what has been manifested in the US inflation rate. And thus, since we know that the M2 rate of change has continued down for some time, and we know that this tends to lag by around 19 months, it tells us that we are likely going to continue to see inflation come off. And thus that inflation to deflation pendulum that I keep harping on about, where we swing from a highly inflationary to a highly deflationary environment, seems to be very much on the cards, doesn't it? Tells us to keep an open mind about seeing indeed that deflationary bust. And of course, that is where this melt-up chart, which is the staple of this channel, has come from. We get this run to all-time highs, and then we get a rollover as we get to a deflationary bust. Remember, this will be asset deflationary and likely culminates with a bunch of this pink stuff that I've written here. As ever, one day at a time. But so far, so good. Happy days. Meanwhile, 97% of the stocks in the S&P 600 small caps closed green yesterday. And that was the best day in 12 years. You very rarely see days like this in a bear market. This was more than just a bear market rally, like many people are still claiming that it is. Look at that, 97 at the hard right edge. Also remember, less stocks have made new 52-week lows in late October versus early October. And this was in the face of price of the S&P making new lows. Also, we had less stocks below their 50-day moving average, and we call this positive divergence, of course, and you tend to see this around major lows. It says things aren't as bad under the surface as they might seem, and it's now time for expansion. Again, this expansion has also been somewhat confirmed, for now at least, by the break of resistance, hasn't it? So again, it tells us to keep an open mind about seeing new all-time highs over the next couple of months. Of course, a major criticism of this is, Camel, where's the liquidity going to come from? Camel, aren't they undergoing tightening at the moment? And to that I say, keep your eyes on the prize, okay? Almost 200 billion in liquidity has been injected since the start of November as reverse repo balance falls and the Treasury General account balance hasn't changed either. Risk assets like Bitcoin and crypto are going to continue to fly. And this is the reason why. Where's the liquidity going to come from? Well, right here, okay? Not to mention it's also coming from the BTFP program, right? The QE disguised as a loan program for banks. There are various other places that we are going to see liquidity coming into the system from. And although it doesn't identify as QE, make no mistake about it, it is indeed QE. Over in the world of Bitcoin and crypto, the SEC has again deferred making a decision on whether or not to approve the first US ETF that invests directly in Bitcoin. So the more this thing gets kicked down the road, the more it starts to look like Camel's crazy idea of a left translated cycle top, whereby the ETF is used as a price suppression and distribution tool, starts to look more and more feasible, right? Now again, to be really clear, because there's always a few of you that come out and say I'm spewing nonsense, this is a hypothesis, it's not a prediction, okay? One day at a time. But undeniably, if we continue to go up like this, and then they approve the ETF right around that time, when we are due to see a left-translated cycle top, I ask you rhetorically, is it reasonable to expect they launch the ETF after this massive left-translated top and a wave 5 extension in Elliott wave theory, only for then the price to just go parabolic again? Is that really reasonable? I don't know. The closer to the halving and the left translated cycle top we get, and this ETF still hasn't been approved, I start to get more and more convinced that this is probably not what it seems. And if you're not convinced still, go back and look at what event marked the exact top in 2017 for Bitcoin. And from potential tops to all-time highs, look at Bitcoin go, okay? This is against the Turkish lira, a fresh new all-time high. How long is it really before every single Bitcoin fiat pair has this type of shape to the chart? A couple of days ago, we saw $68 million in long liquidations in a single hour, and we could only see the price drop 3% to 34,500. Now, this was the single biggest spike in 1 hour long liquidations in a year, and the last time this happened was the FTX collapse. It goes to show we just had the biggest long liquidation cascade since the FTX blow up, and the price could only make it down to 34,500. To me, that is as bullish gets. Speaking of bullishness, the Bitcoin RSI is getting stronger. The trend is indeed clear. Okay, at the hard right edge, tells us to keep an open mind about seeing continuation as we approach the next local top. We've also got China's largest board and card game company about to acquire $90 million worth of Bitcoin and Ethereum. So take a good look at that. And speaking of acquisitions from larger players, did you know BlackRock did a lot of buying yesterday, even on the small caps? They added 4% more to their Riot position, 3% more Mara, 5% BTBT, 2% BitF, 3% Cypher, and 34% increase on SDIG, 85% increase in TerraWolf. Whilst the sentiment is beaten down on the miners, whilst the charts are subtly getting better, BlackRock is doing BlackRock things. So getting into the charts, I don't think a great deal has changed, has it, right? The dollar is still moving down. The chart of truth, the 10-year yield, still looking to break down. Happy days there. Bitcoin, still doing Bitcoin things, isn't it? Look at that. Perfect half cycle low for Bitcoin, new highs, and now back above this allegedly bearish rising wedge. Tells us to keep an open mind about seeing the rest of this cycle potentially play out before we get to the 60-day cycle low and the weekly cycle low, doesn't it? So long and strong there, continue to push. Crypto-related equities starting to move and starting to look better and better, in my opinion. Again, it's a long and strong, continue to push type of deal. Here's MicroStrategy, right? And here's Riot, again, back above this range, looking to break out. I think it's going to do it soon. I think it's put in enough basing here, and I think this thing is loading. And Marathon up 11.5% as of yesterday. So again, a little bit of work to do to get above these local highs, but get above that, and I think 14 plus comes pretty pronto thereafter. In the world of commodities, we're still short oil, and that seems to be the case. There is no reason to exit this short until we break out this downward sloping red resistance line. Gold, I was talking about how we got a potential candidate for a swing here, but that I didn't really trust it and that I was favouring playing an all-time high break if we could get there. Well, for now, this certainly doesn't look like a big, strong cycle. Now, it certainly could come violently tearing out of here and do something like this, in which case we'll get long on the all-time high break and put a stop below here. But for now, I was still kind of my intuition is telling me this is what's coming next for gold, and then eventually once we get down here, it's time to load up. Silver looking a bit better, isn't it? Look, right into this local high cluster, needs to get above there, but from a risk reward perspective, right, it's probably going to get hung up in this red zone. So I think for me, I would rather play patient here. If it does indeed break out of this massive downward sloping red resistance line that goes all the way back to $50, then this trade right here would be a much better R&R trade, in my humble opinion. And I do think if we can actually get out of here, then whilst we will get hung up at 30 for a little while, we will likely see $50 come pretty quickly. However, my base case is still that we're going to have to roll over one last time into Q1 of next year. Before then, we could buy some swings down lower and look for this big run. Keeping an eye on the miners, the gold miners, because they will give me some subtle hints. So for now, not screaming bull market, is it? And the same is true of the junior miners. Again, I'll keep my eye on this. If we start to blast off and particularly break out these big outside ranges, then again, we've got a different type of trade and market on our hands. But for now, I don't really see anything to get excited about. And I almost forgot to do the stock market, didn't I? So what is there to say, really? Apart from long and strong continue to push. We are clearly breaking out. A lot of people have been saying to me, oh, is a pullback coming? I think it probably is, right? It makes sense because we undid 3 months of decline in about 2 weeks, right? It used to be a case of stair step up, elevator down, doesn't it? But this is stair step down, elevator up. So what a time to be alive. Is some level of pullback to be expected here? Yes, it is. I also think what we need to do is adjust this count. We do have a cycle inversion. I think this needs to go here. We'll call this the weekly cycle. This needs to be measured out another 20 odd days. It's going to look something like this, I think. So I think we do now have a new count. I think this is now correct. I think this tells us that our next cycle low will be due somewhere around the 26th of December. I think this is indeed an inverted cycle. If you don't know about that, then go and check out my How to Trade Cycles video. It explains it in there. And speaking of inversions, I think we can pretty much solve this inversion for Bitcoin and say that this was not an inversion and instead this is the correct count. So we stick with this count for now. This seems absolutely fine to me in terms of the Bitcoin count. The S&P 500 count, like I said, I think we do have a cycle inversion here, meaning the half cycle low has been forced to a cycle low, but that's fine. We just label this the weekly and the daily cycle and we continue on as business as usual. The NASDAQ looks even better than the S&P, doesn't it? There's gaps galore here, but I don't think these ones are getting filled. I know a lot of people think they have to. They certainly do not have to. And there are plenty of gaps on plenty of charts that never ever get filled. So I reckon this one probably will. This one seems reasonable to fill, a little bit of a pullback to fill this gap and go, but I don't think these ones are getting filled for a very long time. And here's the Dow Jones. So what can you say, right? Long and strong, continue to push, measured move all the way up at 38.2. So we'll see if we can get there. There's going to be a bit of chopping around in the meantime. VIX still looks like it's getting crushed, doesn't it? So, and we know we got Friday coming up, and typically on a Friday the VIX gets smashed as the short selling crew hop on. So I expect to see this down at the bottom of this range by the end of this week. And the Russell 2K, you know, some level of pullback since we've had this massive move, but again, long and strong continue to push. And I think overall, it looks like this move to all-time highs is brewing, doesn't it? It really does. I don't really know how else you can interpret the data. All those member stocks look great. I know a bunch of you have been messaging me asking for a members only video. Remember, you get one every Saturday as standard, and then I'll add some more in as and when I have trades to show you. But expect the next members video to be out on a Saturday. There's no change or update from me because everything actually looks pretty good, doesn't it? So overall, happy with that. For everyone else, thank you for being here. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.